So you've been in operation for 10 years, but time and again the conversation about venture debt companies not being in abundance comes in India, and the need for them is one that cannot be ignored today. With respect to being one of the leaders in the sector, where do you see the potential of the work that you do, and what kind of partners are you really working with at this point in time?
Great. The first one is the big one, which is potential of venture debt in the country. So when we started off in 2008 as Silicon Valley Bank's India arm, there was little of venture and none of venture debt. Right? We pretty much seeded the industry. And venture debt typically works very closely correlated with technology and with patented IP and so on. And India is a very different market. So it took us some time to actually retool, recalibrate that, and figure out what will be the surrogates for IP in India. In a sense, how venture capital has evolved in India. So India is not a market for garage startups building huge product companies which become multi-billion-dollar work. These are execution plays. These are, tough stories, but improving access, convenience, discovery for customers, solving real-world problems, but using technology for that. So we had a same evolution, and over time understood that there are clear differentiating factors for companies against which you can underwrite and provide debt capital to them. These are non-profitable, these are asset-light, these go against the grain of debt, but we are able to understand them well enough to put these structures to work. All asset classes take time to evolve. So from a venture debt perspective, we needed a very robust venture equity ecosystem. We needed founders to be aware of the product, founders to know when to use it, when does it work well, when does it not work well. So this is like a 10-year conversation which is ending now. It's so much of, it's like Churchill said, right? You have to work through the night for your off-the-cuff remark the next morning. It's been 10 years of working hard at it. I think now there's a very good understanding of what this can do, how this can help companies, can it extend runway, can it improve, can it be a catalyst for accelerating growth. And even the second question that you asked, which is, it's important to work with partners, it's very collaborative, so you need a very strong equity ecosystem. You need folks who understand where this fits in, how this fits in, and what happens when things go wrong, what happens when companies don't perform to plan. Both from a founder and VC perspective, it's a triangulated approach, right? We all work for the same team. The idea is to solve for problems rather than create more. Today, as we stand, I think there's a lot of interest in venture debt. Alteria, it's an 800 crore fund with a 200 crore green shoot. We've already crossed 500 crore of commitments, and that says a lot about the kind of interest in the market. If you look at the domestic LP base, there's a lot of curiosity about participating in the startup ecosystem. This gives them an asset class where there's predictable returns, and it allows them to participate with not exposing themselves to much risk. So we have seen interest from institutions, from large families, and it's a wide range of investor interest. I think from a company side, it is very clear that there's a need for this capital. It is a cheaper form of capital compared to equity, and you get one more partner on board who can help you grow the company.
Is the extension of your work also a form of turnarounding the company? Do you do turnarounds?
Yes and no. So it's not ideal. Venture is not ideal for acute stress situation, because at that time you're essentially looking at equity risk. So it needs to be met with equity capital. So we don't do distressed in a sense. But the part for the course is many of the companies that we fund end up burning through their cash, and there's a little bit of a period when they need to survive on fumes in a sense. So it's about managing those difficult situations, which is helped us get to where we are. The founders understand that there's a high level of empathy with the recognition we're all playing for the same team. I think that's the core philosophy, and that ensures that wherever there is a good business which is going through a tough time, but fundamentally it is a strong business, we work to get it out of that rut.
With respect to India, where do you see venture debt capitalists going, and Of course, the need is only surmounting and it's relevant. But how do you see in the midterm? We have so many startups opening, closing.
Yeah.
We have startups looking for hand-holding, and not only startups, we have big family offices looking for hand-holding, and India is a cash-crunched country. The world knows that.
Well, actually, I have a slightly different view on that. See, if you look at the venture debt construct in the US, it's about 15% of the venture equity market. We are like 3% of the venture equity market here, right? So if I look at the next 10 years, I think there'll easily be 20 to 30 billion dollars of capital coming into companies at a seed A, B, C, and 15% of that, we're talking about a $3.5 billion market. We are just getting started, right? So there's a lot of potential to grow, both from an equity perspective and a debt perspective. We just spoke about that on the panel now, which is you're getting good quality entrepreneurs. There's a better understanding of what it takes to scale a business, what kind of team competencies need to be built, how much money does it take, how much time does it take. We have more data. We have 10 years of data, which is helping a lot of founders, leapfrog situations. So I think as an ecosystem, we are evolving, learning, maturing, but we are still getting started. I think there's a lot of demand both for companies and for capital, and there's a lot of capital available as well. So it's about making that magic work, right? Getting the right fit. And from our perspective, we think that the venture debt market is extremely robust. It's a multi-thousand crore market over the next few years. So, but as you said, there are a few more players who are also. It's a good sign that there's interest in the space. I think competition is it's like somebody has said, it's better to be a bird with a lot of fish than just the only bird with no fish. Right? So the competition is good. It's a good signal that it's an asset class which is finding its own. And we are fortunate that we started it off, and we are in a good place.